So, Jaseena, thank you very much for coming in today.
Thank you. Thank you so much. The pleasure is mine.
Oh, absolutely, absolutely. Yeah, no, I'm glad you reached out to me on social media, and we can make it work. So,
Yeah, honestly, that's the new trend now, right? Like, we're so close to each other, but it's like, where do I find you? And social
no,
media
it's
is.
true. No, well, that's true. I mean, I would imagine it's a big disruptor in our industry in real estate. I imagine it is the same for mortgages, or
Absolutely.
yeah.
Yeah.
Okay.
Yeah.
Awesome, awesome. So you work with National Bank?
I do. I
Okay.
do. I've actually, my whole career has been with National Bank. I've actually joined National Bank, I would say, in 2002
Okay.
as a CSR right out of high school. Actually,
Nice.
it's funny because I did a co-op program through high school.
Okay.
Grade 12, trying to figure out where to go and, which program to sort of focus on. And, back then they had the co-op program.
Okay.
So I obviously took that and it was good. I wanted to, get a better understanding of how the banking works, right? And that was it. I did love it. They trained me so well and stuff. And then I guess luck was on my side when the program ended. They just happened to, somebody was retiring.
Okay.
So therefore they, hired me or took me on.
Awesome.
And I was already trained. So they're like, oh, perfect. And that was it. And then I sort of stayed part-time through university. I was like, just keep doing it, keep learning it. And then I graduated from UFT, and then I realized I did more like business management and industrial relations.
Okay.
And then I thought, oh, I'm going to go after this. And then I sort of stayed within the banking industry.
That's awesome.
Became an advisor, so learned all the banking aspects, and then ventured off to a mortgage specialist. Where
Awesome.
I specialized in mortgages. Yeah.
So all out of co-op from high school.
Could you believe it? Yeah.
Oh, that's awesome.
Yeah.
Actually, no, a co-op is awesome. I think they're starting to bring it back because we actually had Michelle and I. We took on a co-op student last year.
Okay.
Shout out to Thomas. He's really good. But we actually decided to take him on just for like a couple hours a week, just to do some some tasks that we don't have time for. But no, it's awesome.
Yeah.
They get to see what they could potentially be doing. Maybe they don't like it, or maybe they do.
Yeah.
Yeah.
Like university and college, academically, how much you're gonna learn, but the hands-on, right?
Yeah.
Yeah.
No, it's true because you can learn about something in school, but then the actually practically applying it might be different. You might say, "Hey, this is not for me," or maybe this is for me, and I wouldn't have thought otherwise, right? So,
Of course.
yeah, that's awesome. So, National Bank. So, do you mind talking to us a little bit about National Bank? Because I mean, I'm not as familiar with them as because I usually think about like the big three, like TD, CIBC, those guys. But it's good to have. You guys are still a fairly big bank. Tell us about National Bank.
Of course, yeah. So National Bank, we're actually one of the big six banks
Okay.
of Canada. We
Okay.
are leading in Quebec, so we are Quebec based.
Right. Okay.
We have, I think, over 650 branches all across Canada.
Oh, very
over
nice.
17,000 employees. Maybe in the GTA, you're not, really seeing that much
Okay.
presence, but we're definitely out there. We recently acquired CWB out in the west side.
Okay.
So Calgary and Vancouver side.
Very
so
nice.
that was a really big acquisition. So yeah, I mean overall, it's a huge institution,
Okay.
and we have all sorts of banking, products from obviously the mortgages side, the banking side, investment side, wealth management, commercial. So pretty much anything you could find at any of the other big.
Any other bank?
Yeah.
Okay. Awesome.
You'd definitely be.
No, for sure. I've heard of you guys. No, I know you guys are a big firm.
Yeah.
Just no, I was just curious because a lot of clients, especially nowadays, everyone's looking for the best deal, the best option, right? So
Absolutely.
yeah,
Yeah, and we actually have like really good promos and obviously attractive rates and stuff like that.
Okay.
Even professional packages for a lot of our professionals, like medical professionals, accountants, lawyers, engineers.
Okay.
So yeah, definitely a vast majority of products.
Awesome.
Yeah.
What do you think? What do you think makes National Bank different than the other big six banks?
Well, honestly, we are, customer service oriented.
Okay.
That's our key priority. I would say definitely myself and, our whole team is passionate about, helping the clients and obviously giving them the right products, advice,
Right.
and anchoring them with, the suitable products for them.
No, for sure. Oh no, it's a people business, right? Just
Yeah.
like real estate. So no, that makes sense. What made you get into? Because you mentioned you started, in the branch level, and then you moved into mortgage specialist. What made you kind of gravitate towards the mortgage specialist?
Honestly, I at the branch level as an advisor, I sort of did everything: investments, account openings
Okay.
and personal banking, and of course mortgages. And then I realized I had more of a passion for the mortgage
Mortgages.
side.
Okay.
And
Okay.
even till today, like, oh my god, every file, every case is so unique, and I just take so much passion in helping clients achieve their big goals,
Oh, for
and
sure.
get them into their home. So
Nice. Do you still do you work in the branch level, or are you remote, or how does it you?
yeah, sort of hybrid, you could
Okay.
say.
Okay.
So I do have a home-based office, but of course, we're available to go into any
Sure.
National Bank branches. We're able to travel, so normally where clients are,
Okay.
meet them at their homes, at coffee shops, wherever.
Sure.
So, and then of course, remotely we could also close deals.
Close deals. Okay.
Yeah.
Where is your branch?
So I'm out in Brampton.
Brampton. Okay.
Yeah.
Okay. Awesome. Awesome. Nice. But I mean, online, like we said earlier, open the sky becomes the limit, right?
Absolutely.
So you would lend. So National Bank. So your branch can lend anywhere in Ontario, or can go like Canada wide, or how does
Yep.
that work?
Because we're obviously a Canadian bank,
Right.
so I've actually even closed deals out in Calgary,
Okay,
in
nice.
Vancouver. So because
Okay.
we have branches, and I'm not really a mortgage broker, I'm associated with National Bank, so
Right.
we are able to close, Canada wide.
Okay. Okay, that makes sense. I know you mentioned earlier you've never been a mortgage broker, so you can't touch too much upon it. But in our industry, so okay, that's the reason why I had decided to have you on is because mortgages are a main thing of what we do. Not necessarily what we do, but it's how our clients finance things, right? Purchases. As prices of things are
Yeah.
crazy, right? So
Yeah.
you obviously almost always need a mortgage.
Yeah.
So that's kind of the bedrock. In fact, when we work with buyers, one of the first things we ask them is, have you been pre-approved?
Yeah.
So, have you spoken to a mortgage agent, a broker, etc. So, our buyers, that's the reason why I decided to do this podcast with you, because, everyone's looking for the most amount of information, especially in first-time home buyers. They don't know where to start, or if, we guide them, the first place to start is get pre-approved, speak to someone like yourself. But they want the best rate, obviously, with affordability being of mind right now, especially. They want to have their questions answered. So I guess my question to you is, so they come to you versus a mortgage broker. What do you think? Are there differences versus coming to you versus a mortgage broker?
So I would say, again, so my role is to acquire business from outside.
Sure.
And work, closely with our real estate partners. So it's the relationship that, hey, Jaseena, we know if I send you the client, you'll take care of them,
Right.
and pre-qualify them all, according to their needs. So I would say, because working with the bank and National Bank for so long, I know the niche, products. We have the best rates offered to us. So it's really personalized, and obviously so suitable to the client. And that's where, most of my, I would say the sale starts at the pre-approval process,
Right.
where I've pre-qualified them completely with, confirming their credit. We're even holding rates at this point.
Okay.
So pre-qualifying them and then confidently telling them that, yes, you should be able to, go up to this purchase price, and, at some point, even giving them maybe an option to go firm, because again, we've done all the homework.
All the background, right,
There's
beforehand.
no surprises later.
Okay, no, fair enough. Yeah, yeah, no, because I see both sides of the argument, because I work with advisors like yourself, and also mortgage brokers. So, the mortgage broker will say, okay, well, I have, I can shop around and get you, the best rate overall, but that's kind of their shtick. But I've also had issues with that in the past where, maybe they help you shop around, but then the actual specifics of the mortgage was never explained to the client. We've had kind of horror stories where a couple days, or not even like the day of closing, the mortgage instructions were not given prior. So, they had accounts to settle up, things to get done before closing, but on the same day, it's a mad dash. The lawyers are involved now. Everyone is stressed. So that's where I've seen value in someone like yourself, who actually works with the bank.
Exactly.
You work at the bank, so you're in a better position to know what is actually going on, and maybe service the client a little bit better.
Absolutely. That's what I'm saying. So that's where I'm their main contact person,
Right.
super flexible, and, they could pretty much reach me anytime, and,
Right.
it's not like, oh my God, where is she? And then, of course, if I'm not there, they could, go into the National Bank branch,
Yeah.
and they could look up their file. So it's not, that we're just going to abandon them. So it's definitely, and
For sure.
I take customer service like to heart. Basically, I realize over time that a lot of my business does come from my past clients, or them referring me friends and family. So again, like I said, customer service is huge for me. So it's
Right.
the client satisfaction, getting them the best rate, and upfront I could sort of judge their file and see if they fit into our policies, and better guide them
Right.
at that point. So it's really just directly with the one bank,
For
where
sure.
we're so have all the powerful knowledge and the tools on our
Right.
products.
Yeah, I think things can be more streamlined when it's just one bank, one way of doing things.
Yeah.
You've been around the block before. It's the same thing. Not a different procedure with this bank, that bank, anything else. No, that I mean that makes sense to me, right? So I like just trying to give everyone the choice, and then they decide for themselves, right? But I mean, going back to rates, I mean, you guys have, I know you said you can't comment on specific rates, but I would imagine you guys have fairly competitive rates as well. Can you
Absolutely.
touch on that or whatever you can
Yeah,
say?
yeah, absolutely. Honestly, we're again one of the major A-lender banks,
Okay.
so we're not going to compete with the smaller banks like True North and stuff like that.
Okay.
But it is again a major institution, so ideally, what they're probably going to get at RBC or TD, we're going to be right there as
Okay.
well.
Okay.
So it's very, very competitive market. Sometimes, the conversation starts with, "Hey, what's your rate?" But how do I know what's your rate when I need to get to know the client and understand their, file and their needs and their projects and their time horizon, and then better, advise them. So it's really working with a mortgage advisor at this point, because then, we're looking at everything overall and
Right.
giving them the best sort of advice based on their needs.
Okay, for sure. Can you give us a rough idea, like what are the current rates right now for variable fixed? What
Yeah.
what's the ballpark?
Absolutely, yeah. So I would say on average, again, these rates change on a regular basis.
Of course.
But I would say insured deals, so that's where people are putting less than 20%.
Okay.
So they are government backed, CMHC. So you're looking at rates of about maybe 4.09, maybe it
Okay.
could go up to, I don't know, maybe under
Okay.
3.99.
Okay.
So in that sort of range, again, so they are going to get the better rates.
Okay.
And then the conventional, so people with 20% down on a primary residence, you're looking at maybe 4.2, 4.3.
Okay.
And then on rental properties, it's priced a little bit higher.
A little bit higher.
Maybe
Okay.
4.4, 4.5.
Why is it a higher rate for someone with more than 20% down?
Well, I know, right? Like, hey, you're putting 20%. So this is actually something new, not like that old, like,
Okay.
compared to how long I've been doing it. But basically, it's a government. So they are paying an insurance fee,
Right.
right? And it's basically a protection for the bank.
Okay.
So it's sort of like a reward, for,
For putting less down.
well, putting less down, but because they're paying a huge fee,
Right,
20, 30,000, depending on the purchase price.
Right.
And again, the bank has some sort of security that, hey, if something happens, at least the mortgage is insured.
Right.
So therefore, we do offer,
Yeah.
and it's just not National Bank; it's an industry
No, for sure.
thing. But yeah, with 20%, you think, hey, nobody's gonna walk away, from their
Right,
house, because
right.
it's.
You would
but,
hope not.
Yeah, or at least with the craziness lately with the prices, going
That's true.
down. So yeah, so everything is sort of.
Well, a lot of people don't realize how expensive the mortgage insurance is on a yearly basis. You said about like around 20, 30 grand, depends on the mortgage, I guess, right?
Yeah, it's a one-time
Yeah.
fee that's
Right.
added into the mortgage,
Okay.
amortized over, the 25.
Oh, so it's a one-time fee.
Oh,
Okay.
yeah.
Okay.
Oh, yeah,
Okay.
yeah, exactly. And it's basically, a faster way to entering home ownership, right?
Right.
If
Right.
somebody says, hey, I'll take 5-7 years to start saving for the 20%. Hey, by then the home prices, are already,
For sure.
so you're kind of playing catch up with the market. So at this point, it's, let's get into the home, at least you're a homeowner, and obviously let the equity grow.
Right.
And of course, then there's that one-time fee that's amortized, and the payment difference is like minimal.
For sure. Do you know how that works exactly? So is the mortgage guaranteed? So that's insured in case you lose your job, or do you know the exact
Yeah,
circumstances?
basically, it's a default insurance.
Okay.
So if somebody puts in 5 or 10%, it's like how much have they really invested in the home?
Right.
And then the government, so we work with 3 different companies: CMHC, Sagen, and Canada Guarantee. So,
Okay.
And they all work exactly the same.
Okay.
But basically, it's, hey, if they cannot pay their mortgage and they say, sorry guys, like I'm going to walk away.
Right.
So that's where the government, one of those companies
We'll take over.
we'll take over and insure the bank that, you're not going to have any losses
Okay.
And they're basically
So that insurer would reimburse the bank for whatever it is, the 400,000 or 500,000, whatever it is remaining. Okay. Would there be any repercussion for the buyer or no? Because that's the insurance policy; it's cashed in type thing, or
yeah, and I mean obviously they're walking away, so it's a foreclosure, so
is there any way where that would not apply? So say I have a mortgage with mortgage insurance and I lose my job, or I just decide not to pay at all, even though I can afford it. Like you're covered either way, or there's certain stipulations.
I mean, like a lot of these companies will help support in financial hardship.
Okay.
So it's like, hey, I don't want to lose my house, but hey, I can't pay my mortgage, and they would then work with the client directly, again specific to their needs, and say, okay, do you have any other avenues of paying back the mortgage? Maybe allow them to skip some payments. So it's definitely there. Like the last resort is, hey, I don't want to pay, I'm leaving, sort of thing, or let's work with you and see.
Okay. No, that makes sense. I think a lot of that's going on right now. Is that fair to say? Yeah. Yeah. I'm sure the rules kind of changed with the 20%. You can go up to, it's staggered now, right? Up to 1.5 million.
Exactly.
Have you seen a lot of people taking advantage of that? What is your opinion on that?
Yeah, I mean, it's definitely, an incentive that the government had introduced because it was capped at, 999. So now it is 1.5. So again, it's the first 500, you could aim for 5% down.
Okay.
And the remaining up to 1.5 million, you can go up to 10%. So in some cases, you're maybe at 8 or 9% down payment.
I see. Total. Okay.
Exactly.
Okay.
Right. Because you have to look at that.
Right.
And it's definitely an option. Obviously, those qualified buyers that have all the requirements and have the minimum down, the income, everything needed. Yeah, if there's properties out there and they want to go for those, then at least that option is there.
Well, you alluded to what I was going to say next is the income needed. So you need, just because you take advantage of that, you need a lot of income to prove that, right? Because 8 or 9% on 1.5 million, that's going to leave you with a very large mortgage, right? So the payment's going to be high. So they need to be prepared for that. The buyer, that is.
Correct.
So okay, so you have seen a lot of people take advantage of it. Yeah, interesting. Okay,
exactly.
Okay.
Because then, like, you have clients that, oh my gosh, I have a certain income, but then maybe their family members are helping with co-signing. So it's like we have different options. So yeah, and I mean definitely those qualified buyers that have maybe multiple, not multiple incomes, but we'll look at everything overall.
Oh, it's overall. Okay.
Yeah, exactly.
Okay. See, for me, I see, my view is always when I sit down with the client, I try and tell them, listen, okay, yes, you're pre-approved for X amount, but you want to give yourself a little bit of breathing room, because I'd never like to see someone so extended where they're like house poor, right? So the idea is, okay, you're pre-approved for this amount, that's fine, but maybe we can find you something a little bit under that, just so you're comfortable, right? And then you can always move up next time, and they can call Jaseena and get a better mortgage next time, or a bigger mortgage. But in the meantime, don't put so much stress on yourself, right?
Yeah, just because you want this specific.
Yeah, because then there are other costs too that they don't think about. Closing costs, lawyer fees, land transfer tax is very expensive, right? Especially if you're buying in Toronto. So okay, so going back to like the pre-approval process, and even the overall mortgage application itself, going back to the rates, like how does one get the best rate? What is the bank looking at to get the best rate? Is it tied more to your credit score, or is it an overall approach?
Yeah. So with National Bank, or I guess most of the lenders, it's basically everybody will get the best rate as long as you fit our policy. So it's not that because you have a low 600 beacon score that we're going to give you a higher interest rate.
Okay.
It's basically, you're approved with us, so we're going to offer you the best rate. Now, yes, if they're willing to do more banking with us because we are a full-fledged bank, then maybe we could offer something better. We have great promos if they open an account, then the financial packages that I spoke about, I think I did, based on like if they're lawyers or accountants, so offering them a whole bundled, package with other banking, could lead to
a better rate. Okay. So what are you looking at? So in the initial pre-approval, I think it's what your credit. You're looking at credit score, your job letter, pay stubs, that type of thing. Anything I'm missing?
Down payment.
Down payment.
Yeah,
okay.
It's a key. Key
Okay.
indicator as well. We need to see where the money is or where it's coming from. So obviously validating that the down payment is also
okay. Yeah. I heard, is this true? So if you have a down payment, you have whatever 300,000. Does it have to be? Is it true it has to be sitting in one's bank account for a certain amount of time before it can be used as a down payment?
Yeah, ideally we like to see a 90-day, trail.
Balance.
Basically.
Okay.
It's not to say, hey, all of a sudden I just got this money.
Right.
2 days before closing. Okay, So we need to explain where that funds
Where it came from. Okay.
Has come from. So if it's originating from their salary deposits and they're saving over time, So again, just want to see maybe a 3 to 6 month trail.
Well, a lot of people, a lot of reality is, the bank of mom and dad they're going to first. So I mean, so if it's a gift, if some or most of the down payment is a gift, does that still would that still apply?
No, exactly. So as long as again we're validating that mom and dad are going to give them a gift, they're going to be signing a gift letter, then of course we don't need to see that money up front.
But it doesn't need to be shown there for 90 days.
No,
okay.
Exactly.
Okay.
Yeah. So then at that point, maybe a month before the closing, they could have the money transferred over.
Okay.
And we just see that the transfer, was made by the mom and dad.
I see. Okay. As long as everything's documented where it's coming from, can't just, operate out of nowhere in the money. Okay.
Exactly.
Okay.
Yeah.
Cool. So it's, so the deposit is key. So will that affect the rate or is it more of overall umbrella?
Yeah, no, like I said, then the insured deals, so with less than 20%,
right,
obviously would get slightly better interest rate. Again, that's just an industry-wide thing. But anything more than 20%, yeah. And I guess the higher down payment, so some people, maybe they're upgrading and they have a bigger down payment, then obviously when the LTV is even higher,
right,
where they're putting a bigger down payment, sorry, the LTV is
lower. Okay.
Yeah, lower, sorry. They are offered slightly better rates as
well. So they do reward you for paying it. Okay.
Exactly. Okay. If somebody, hey, I got 35% down because I've sold my house, I had all this equity. Perfect.
Right.
Yeah. So we are going to price them. And then even also a big thing on the rate. So if you're going to put 20% down, you could go with a 25-year AM if you qualify or 30.
Okay.
And then the 25-year amortization would get a slightly better rate.
Okay. Is 30-year amortization still only available for first-time home buyers? Oh, it's for anyone now? Okay.
Yeah. In fact, it used to only be available for people with 20% down.
Oh, okay.
But now...
it's available to anyone.
Exactly. So now it's even for insured, as long as you are a first-time home buyer.
Okay.
You are able to take up to 30-year amortization.
Do you mind explaining? Okay, because I know a lot of people are confused. A lot of buyers are confused with, okay, so it's not, our mortgages are not like in the States where you get the one mortgage and you can have it for the whole amortization period. So do you mind explaining the difference between, okay, so we do the mortgage based off a 25-year or 30-year amortization, but my mortgage term might only be like 3 or 5 years. So can you explain what is that?
Yeah, so basically, I mean, we have rates up to 10 years, right?
Okay,
so you could actually go, but...
No one seems to do that, though.
Honestly, yeah. In my role in the last 8-9 years, I don't think I've ever sold anything, higher than 5 years.
Right.
Only because, again, the renewal, maybe their financial situation could change. They want to sell, so you don't want to be left with a hefty penalty.
Okay.
And then over time, historically, the rates sort of come up and down.
Okay.
So why lock in? Because usually 6 to 10 year term would be a little bit of a higher interest rate because the bank can't predict how where the rates would be. So that's why the trend or the norm here is basically 3 to 5 years. Even the 1 and 2 are sort of popular.
What do you do most of? What do you see?
I would say, and even today when we look at our rates, I would say anything over 3-year fixed or better is our 3-year or higher are better.
Okay.
The 1 and 2 are a little bit higher.
Okay, maybe it depends on their situation or whatnot. Okay.
Exactly. Unless they know, hey, we're selling our home in 1 or 2 years, we want to go short term.
Okay.
And then the 5-year variable is also on the 5-year term.
Right.
So
okay.
Variable.
So what happens exactly? Okay, so say for example, I do 3-year fixed, 25-year amortization rate. Okay, now my 3 years is up, and that would be qualified. That would be called a refinance, right? Or renewal. Or renewal. Sorry. Yeah. So what is exactly happening at the renewal?
Okay, so ideally, again, that's I think where we're seeing a lot. I think in 2025, 26, we're seeing a big chunk of book of renewals coming up.
Okay.
Okay, so basically, you either say, okay, I could stay with my current lender. I don't need any new money, or I don't need any equity out of my home. No refinance. Perfect. You negotiate the best rate with them.
Okay.
And you could renew it. Now, sometimes they'll just mail you, a renewal letter, and you just think, hey, that's the best rate. So obviously you could also negotiate with them at that time, and or shop around with other lenders, where maybe we have a better incentive with cash back and and a better rate. But yes, when you switch over from your current lender into a new lender, you do sort of requalify.
Requalify again, okay.
Yeah, so you do need to provide all the paperwork and the credit check. Now, there was something that had come out, I think last year, where if you're renewing the same balance, sort of.
Okay.
So if you don't need any extra money, but you say, you know what, I'm with the B lender and let me try to switch to an A lender.
I see. Okay.
Then you could qualify on the old qualifying stress test. where it makes it a little bit easier, but then you have to keep the same amortization and the same mortgage balance.
Okay.
So, but you're still able to shop around. It just makes the qualification slightly easier.
Okay.
Yeah.
Okay.
You still need the credit and the income and everything to requalify with your
Okay.
new lender, but we're using the old qualifying rate at that
Oh,
point
I see.
to qualify.
Okay.
Yeah.
So, but if it's just a straight renewal, you don't need any new documentation. You just, as
Exactly.
long as you're on
Yeah.
good standing with the bank and all that.
Exactly.
Okay.
That's what I was gonna say. So as long as you have no missed payments, nothing of that sort, then there are and I know the banks are super aggressive, when they're
Right.
trying to retain their clients. So obviously it's better to negotiate, but also shop around and see what's out there.
Cool. So then, different between a renew. That's a difference between renewal and a refinance. A refinance is only when you're pulling further equity or
Exactly.
taking
Yeah,
further
maybe
money.
setting
Okay.
up a home equity line. That's
Okay.
a really popular thing.
Yes.
Especially people that bought homes, 5-6 years ago. They've definitely built a lot
Oh,
more
yeah.
equity. So we do offer then, setting up a home equity line for future use, investments, renovations, consolidation, anything so of that sort. So that's definitely.
So you would need to kind of requalify at that point then.
Exactly.
Okay. Okay. Can you touch about what is the stress test? Because a lot of people get confused. It still exists, right?
It is. It
Okay.
is. Yep. So basically, the stress test is. So imagine you come to me for a mortgage, and you are going to take a 5-year fixed rate.
Okay.
At 4.25.
Okay.
Just give
Sure.
an example.
Yeah. Fine.
So now I actually have to qualify you at 6.25. So it's your rate
2%.
plus 2.
Okay. Okay.
So that's your actual contractual rate plus 2. So it's basically to say, hey, if the rates get to that level,
Right.
could you still afford your mortgage?
Okay.
And obviously at that point the rates did get to that
Yes.
level.
Yes.
But yeah, so that's basically the stress test. We are using obviously a higher interest rate than what you're actually getting to qualify you. So it's kind of going back to your point. Let's not stretch the client. To like, oh my God, cash
Right.
poor, and so we do keep that. Look at those ratios
Okay.
based on a higher interest rate.
Okay. Cool. So that would be anytime your new mortgage or refinance, anytime you would still have to apply to the stress
Yeah,
test.
exactly.
Okay.
To the stress test, unless, of course, like I said, if you're just looking to switch over your
Okay.
lender and you want to keep everything the same,
Right.
you say, hey, I don't need no new money, then we can qualify you on the old stress test, which was 5.25
Okay.
that the government had set back then.
Oh,
That was the
at that
benchmark.
time.
Exactly.
Oh, okay. Okay.
Yeah.
Okay.
So then we would qualify you, and those were that was something new that was just introduced.
I see. Okay. So before it used to be less than 2%. It used to be 1. What was it? What was the old stress test?
The stress test was always the posted rate plus 2. Then
Oh,
they capped
okay.
it at 5.25.
Oh, I
Yeah.
see. Oh, I see what happened.
exactly.
Okay.
Because
Okay.
a lot of people at that point got like 1 point something or 2 point
Right,
something,
right.
and they qualify at 4, but they said no, you still got to qualify at 5.25.
Oh, I see. So they kind of set like a baseline.
Yeah.
Okay.
Exactly.
Okay.
yeah.
Okay.
But then when the rates exceeded over 5.25, then it's like, all right, 7.25, you got to qualify. So.
Okay, so now, I see. Okay, interesting. All right, so another question a lot of people ask me is when they should be asking someone like yourself, variable versus fixed. What is your opinion? Can you explain the difference between the two for some of the people that don't know, and then maybe your opinion, what you advise your clients on doing?
Yeah, sure. So honestly, again, it comes down to their needs, their their goals, their specific aspects of, hey, was it long term? Is it a rental property? Is it is it a secondary home? I don't know, right?
Okay.
So at this point, so a fixed rate is exactly what it sounds like. So it's going to be a 1 to 10 year term. You choose you want to go with a 3-year or a 4-year fix, and your rate stays the same.
Okay.
And there's a peace of mind that whatever happens in the market, no fluctuations.
Payments the exact same.
Exactly.
Okay.
Payment is exactly the same. And then after the 3-year or 4-year, 5-year, you're up for renewal. And then you're looking at those new ongoing rates at that time.
Okay.
Versus variable, where, yes, so you get whatever rate we're offering. So you prime minus 50, just give you an example.
Sure.
So then you will fluctuate, your rate will fluctuate as the Bank of Canada adjusts their prime rate.
Okay.
So basically, if the prime rate is going up, your rate will also go up. If the prime rate goes down,
Right.
the rate goes down. So I think the Bank of Canada meets 8 times a year, so they're
Right.
reassessing, the economy and the situation. And
Yes.
yeah, so based on that, but the best thing on the variable is you could switch to a fixed at any point if you feel like, oh my God, like, oh man, the rates maybe
Too high, or-
trending too high, or maybe the fixed rates have gotten much nicer now. So you could lock in from a variable to a fixed at any time.
Okay.
Yeah,
Okay.
as long as you're keeping the same term you have left or higher. So
Okay.
if you start with a 5-year variable, you can't say, oh, let me do a 1-year fix now.
Oh, I see.
You got to keep the same remaining term you have.
So what are you locking in? What would be that fixed rate, whatever the current variable is?
No, whatever the ongoing fixed
Oh,
rate
whatever the
is.
ongoing fixed rate is.
Exactly,
Okay.
yeah.
Okay.
So it could be lower than what you would have been offered maybe originally when you started.
Okay.
So those fluctuate. I see a lot of people with rental properties leaning more towards the variable mortgage.
Okay.
Because then it's sort of like, what if I sell it in 3 years? It's always a 3 months of interest penalty if you break it, versus a fixed rate where we can't really determine, because it could be an interest rate differential where the penalties could be, maybe higher than the 3 months.
Okay.
Because it depends on the ongoing rates at that time versus the rates at this time.
So that's the cost to break the mortgage if you sell or something.
Yeah,
Okay.
exactly.
So with variable, it's 3 months
3 months of interest generally.
of interest.
Yeah,
Okay.
yeah.
Not of the. Okay. Okay. So it depends on.
Yeah,
Well,
so
interest is the big.
Yeah, exactly.
Okay.
And then another cool, a lot of people don't know about it, but again, I do always offer it at National Bank. So we have a multi-choice mortgage where, hey, the client comes in, first-time home buyer, or even, again, a primary residence. It's going to be their long-term home, and they're like, oh, we can't decide if we want variable or fixed, because that's always. So I recommend half and half.
Oh.
It's
Okay.
like why would you? It's like the investment, right? Why would you invest all your eggs in one basket?
Oh, okay. I didn't
Why
know
would
you could do that.
Yeah.
Okay.
So I'm not sure if the other banks offer it. So going back to National Bank.
That's
so,
it.
Yeah. So we do offer that. I personally have it on my mortgage. I think it works great.
Oh, awesome.
And that way you could also diversify your timeline as well. So you could go into a 5-year fixed and a 5-year variable and a 3-year fixed. And that way, if the rates, half of your mortgage is up for renewal at a different time of the market, and you could maybe lock in, and or you could do half fixed, half variable on both 5 years.
Okay.
And that way then, but therefore you're sort of still locking in half of your mortgage,
Right.
in case the rates change, and then still take advantage in case, hey, the rumor, if the rates are going down, then you can still take advantage of the other.
Oh, I see.
And
That's
then
very
your payment is all coordinated together. So it's taken out all together. So it's
I
not
see.
like you're like separate. But basically you do go half and half.
Oh, it's all, but it would show us 2 separate payments, but at the same time.
Exactly.
Okay.
But then
Okay.
it's not like a second mortgage, nothing like that. It's
Right.
just,
2 first
broken
mortgages, I
into-
guess. Okay.
Exactly.
Okay.
Broken down into 2 different portions.
Oh, it's pretty cool. Yeah.
Yeah.
A lot of people can't decide. They have a hard time deciding, right? Okay, awesome. So is it fair to say, so right now, currently, the variable is a little bit lower rate than the fixed?
Vice versa.
Oh, it's vice versa. Fixed
Yeah.
is lower.
Fixed, yeah.
Oh,
Fixed
fixed
is
is
a
lower
little
now.
bit
Okay.
lower, yeah.
Okay. Well, that's all. Okay. That's good. Well, I guess, right now, because I guess things are trending downwards. Okay.
Yeah, exactly. And the fixed rate,
Because fixed rate is based off the bond market,
exactly.
right?
That's what I
Okay.
was going to say. Yeah. So they're on the bond market versus the variable is directly related to, the government.
POC rate. Okay.
Exactly.
Okay.
The prime rate.
Okay. Yeah. So they just met last week. They kept it at 2.75.
Yeah. So that's
Do you,
the policy rate. Yeah.
yes. So do you have? That's the same as prime, right?
No.
Oh no. So what is prime? Tell me what prime
A
is.
lot of my clients get confused. Hey, what's this? Okay, so the policy rate of 2.75 is basically the policy rate of the banks with the Bank of Canada.
Okay.
And then the banks, the major institutions, have their prime rate
Okay.
set at a different level, which is 4.95.
Okay.
So the prime rate, Canadian banks' prime rate is 4.95.
But that includes the 2.75 current.
Yeah, exactly.
Okay.
So the 2.75 really doesn't affect the direct consumers like us.
Right.
It's basically,
The bank.
yeah, the Bank of Canada.
So the bank
policy.
adds on about a 2%. Yeah.
Sure.
Okay. Hey, everyone's got to make their money, right? So, okay. Yeah. So, do you have any? Since we're on the topic of interest rates, does the bank get any inside knowledge on where things are going, or can
Yeah.
you talk about that? I don't know.
Yeah, honestly, nobody does have the crystal ball.
Okay.
At this point, it's, they meet, every, again, 8 times a year, and basically it's to determine what's happening and where, the GDP and all of that is. But, I mean, like I said, the economists are possibly predicting, the policy rate is at 2.75, that, the target is maybe 2%.
Okay.
So we, are hoping and possibly seeing that there could be a few more rate cuts.
Few rate cuts, yeah.
But again,
Yeah, I've heard
last 2 wasn't
we're
changed.
holding. Yeah. Well, we've heard. I don't know. I've heard. Through the grapevine that another 0.5% by the end of the year. But we, like you said, nobody has crystal ball. We don't know. No, just because it's top of mind for a lot of clients of ours. People, we're in an affordability crisis. I'm sure you agree. So it's top of mind for everyone. And that was going to lead me to my next question. Do you see on a bank level, on your own level, are the banks working with people to get mortgages done, refinances, renewals, or how, are you guys seeing, are you guys flexible, or how have you found it in this market?
I would say, I mean, we still have to obey the government rules,
Right.
of the stress test, and then we've got the auditors that obviously look over our mortgage files to
Okay.
make sure we've, done the quality work. So at this point, it's really, qualifying the clients for the right property,
Okay.
for their needs again.
Okay.
So I mean, not to say, hey, it's a traditional, do you fit into our ratios? Again, like maybe my repeat clients that are upgrading their homes and they have bigger, down payment, so they have more equity in their home. Maybe they have a higher net worth. So maybe for those type of clients, they're are looking at other options to see how we could
I see.
maybe make some exceptions to ratios and stuff like that.
Okay.
Again, it's all me understanding the file and then
Right.
some way of presenting it to the bank and for them to
Sure.
accept it. But again, the high net worth clients, people with bigger down payments, maybe the guidelines could be a little bit more eased
I see.
off.
Is there anything that can be done, or is you are seeing being done for the client that is struggling, perhaps someone that's got a mortgage coming up for renewal, but they know maybe it's going to be a hard time, or maybe someone that's trying to qualify and for example, someone that's struggling. Are there any ways to help,
I would
or
say, so personally, yes, I have done files with a few of my clients that didn't qualify on their own.
Okay.
And then like their parent or aunt or uncle
Okay.
was able to co-sign, and then a few years later they were able to remove them.
okay,
So
okay,
it's not something that they're bound to,
Right.
for the rest of the mortgage. But at that point, getting them
They needed
into
it.
the home, and supporting them, and maybe they were working towards their degree or something to
Right.
get a higher income job.
Right.
So at that point, those same clients came back and be like, okay, perfect, we qualify now on our own, and therefore then I was able to, remove
Okay.
the co-signers.
so a little bit of creativity. There is some ways you can help, not always, but you can help
Yeah,
sometimes.
exactly.
Okay.
We're looking at all the possible,
Okay.
options with the client. Yeah.
So National Bank is an A lender, but do you
is.
have B lending as well?
No.
Oh, you don't have B lending. Okay.
No,
Okay.
exactly.
Okay.
So we are just an A lender bank, and a lot of clients maybe they don't fit into our, policy
Right.
or our box.
Right.
And then we could help, them get to this level, maybe by helping them fix their credit.
Okay.
So at that point, if they're starting, because everybody wants at the end of the day to work with an A lender.
Of course, yes.
With the best rates, no fees,
Yes.
stuff like that. So at that point, going back to my advisory days on how to, better help them get to that point. So working with the clients, in that aspect.
Okay. Okay. So there's no real B lending option, or you don't have any affiliates. Okay. Okay. And no private lending, I guess. Okay, cool. No, everyone does want the
Yeah,
A lend for real.
exactly.
No, I was looking into private lending once, and yeah, like the rates at the time were like 10-11%. So no one wants
Yeah.
that if they don't have
That's
to,
like,
right?
oh
But
my god, a super desperate situation. But
Right,
yeah, I mean,
right.
at least it's there and available.
Yeah.
In case somebody's super stuck. But
no,
yeah.
for sure. How does the qualifying process work for someone that's self-employed? Because they might not necessarily have pay stub, job letter. Do you look at NOAs, or how does that work?
Yeah, so we actually, so with the insurance company, there's Sagen with one of
Okay.
the insurance companies. So they do have a business for self program.
Okay.
So we look at options with them. Again, sometimes the self-employed clients, they have, maybe they don't declare too much income, but
Right.
it's all in their companies.
Okay.
So requesting their financial statements.
From the company.
Yeah, and then overall looking at their net worth, So
Right.
again, these are hopefully established clients,
Right.
that have done really well in their company, but hey, like nobody wants to
Yeah.
withdraw all this money and pay taxes.
For sure.
So everything is, in
In the
the company.
company.
So again, those do work case by case.
Okay.
It's not like, okay, slam dunk, we'll do all of those. But again, looking at the overall picture
Okay.
and seeing how the client fits in.
Okay, cool. Sorry, I'm jumping around, but just
Yeah,
as
yeah.
the questions
Sure.
enter. So you mentioned, if you need to break the mortgage, there's a fee associated. But what if someone is, moving up? Like say I'm selling my condo and I'm buying a freehold. does that penalty still apply, or can the mortgage be bridged, or how does that work?
So exactly. So as long as they're coming back to National Bank
Okay.
or maybe their own lender, so at that point it's saying, hey, we're not leaving,
Right.
we're just buying and selling. So we're porting their mortgage
Porting the
over.
mortgage, okay.
Yeah. So we port it over as long as there are certain conditions, like it has to be done within a 90-day period. It can't be, all right, I'll buy it next year.
Oh, I see.
Yeah.
Okay.
So it has to, and then it's usually hey, we're buying and selling. They need a home to live in.
Right.
So it is in that time frame. But yeah, so as long as they're porting everything, same exact balance, amortization, we are porting the rates and there's no penalties. And if they're upgrading, so they need a separate tier, like another mortgage, then we're creating that at a separate portion.
So you would port over the original mortgage and then treat the other one as a second first mortgage.
Yeah, no second mortgage, just a second tier.
As a second tier, okay.
Yeah,
okay.
Like, so and then those are at the new ongoing rates.
Okay.
And then sometimes we look at everything. I think we have like an option if they're doubling their mortgage, like if the size is doubled, then there's no penalty and they could just start a brand new mortgage.
I see. Yeah. Okay. That's not bad. No, because it's it's a concern for some people, right? Because I have a lot of clients that want to move up, and they're just concerned about that, right?
Yeah.
So, are you aware of any? Are there any new? I know there are some saving programs for first-time home buyers. Is there anything? Are you aware? Because I know there's some specific saving programs, kind of a TFSA offshoot for first-time home buyers. Are you aware of anything that you want to elaborate on? Something that
I'd like to elaborate on the first-time home buyers account.
FHA, I think it's called. Yeah. Okay.
Exactly.
Yep.
So it's a new incentive for first-time home buyers. As soon as you're 18, you could open that up. It's $8,000 per year. Up to 40,000, and again, it grows tax-free. So,
beautiful.
That's the best part is you could totally invest it in the market. If you're not buying for 5 years, might as well have growth on it.
Mm-hmm.
And then the best thing is you're able to withdraw it tax-free, and you don't have to repay it back, unlike RSPs.
Right.
Where again it's your earned, money that you have to have a contribution room. So this is available to anybody over 18, as long as they're a first-time home buyer. And the best thing is you withdraw it for your first house, and you don't have to repay it back.
Okay.
Unlike RSPs, where you have 15 years to pay back that money into your RSP.
Oh, I see. Okay.
Yeah. Okay. So this is another creative. And then the RSP itself, the room went up for the withdrawal. So it started with 25, now 35, and now 60.
Oh wow.
60,000. Yeah. So so that's another great
incentive. Yeah. No, for sure. We need every little bit we can get, right?
Of course, it's like the tax savings.
Does the government match any of those funds for the FSHA, or no? It's just strictly your money.
Exactly.
Okay.
Yeah. It's just your money where it's growing tax-free.
Right.
And you're eligible to withdraw it. So it's similar to the TFSA,
right.
In that sense. Actually, no, the TFSA, you don't get a income tax refund.
Right.
So this is specifically for your home.
Right.
You're also getting an income tax refund.
I see. Okay. Oh, that makes sense. So I guess that's pretty much the main thing to help the first-time home buyers right now.
And then the rebate, the new GST rebate that just sort of came out is still sort of new, but anything after May 27th, for the new builds.
Right, for new builds, yes.
Yeah, new properties, buying through a builder, first-time home buyer, you're able to get a GST.
Right. Are you seeing a lot of closing for new builds? Because it's kind of dead on our side.
It is. In the sense, nothing new people signing up for, but closings.
I see, from years prior. Okay. Yeah. Actually, I was going to ask you about that, if you don't mind, because we've had a lot of conversations, especially last year, with clients that bought pre-construction, they bought it for $1 million. It's worth like 800 now. So that, the question is, who's going to cover that spread? Obviously the buyer needs to, but does National Bank help at all with, is there anything that can be done, or it's kind of, your SOL type thing? Yeah.
Yeah. Like again, if it's a rental property, the minimum down payment would be 20%.
Right.
So you'd have to gap the difference. If it's a purchase owner occupied, but under 20%, so maybe an insured, usually the insurance companies, they'll support the values.
Oh, I see. Yeah. The purchase value?
For purchase price.
Oh, okay.
Exactly.
Okay.
So if you're going to go with less than 20% down, then generally we don't need appraisals because they support the value.
Oh, okay.
Yeah.
That's good to know.
When it's conventional, then yes, the banks are appraising those.
Okay.
And yes, if there's a shortfall, then the
buyer needs to cover it. Okay. Or could it even be maybe a situation where, they were initially was 20% down, but because of the shortfall now, it might have to fall into an insured mortgage.
Yeah, if they're a first time home buyer and it's an owner occupied home.
Right, and that could happen.
Yeah,
Okay.
exactly. And or hey, if it's a rental property and they have equity in their own home, we could look at refinancing,
I see.
their home to take out the money to, to gap the difference.
Right. Yeah, because that's a main thing. A lot of people got, I don't want to say duped, but at the time the market was, the sky is the limit and it's never going to fall. And obviously that fairy tale came to a crashing end. So, a lot of people are left picking up the pieces. So it's a tough situation for a lot of people. So, no, it's good to know at least there is a touch of wiggle room, but,
Yeah, to see how we could work with the client.
Yeah, for sure. I know you're not a real estate agent, but you are involved in real estate by nature of your job. Just wondering, what do you think your outlook is on the real estate market? Like right now, I don't know if you delve into the stats, but this is the fourth month or so where we've seen decline in number of sales, and also year over year price is down. Average days on market are up, and could be argued that the real average days on market is actually higher than what it indicates because of the way our MLS system works. But things are sliding. Condos are suffering the most. Freehold is things are still selling, but the average year of your price is down a couple points. What do you personally, I'm sure you're a homeowner and you're in the business. What do you think?
Definitely, it's in some areas there's obviously been more declines than the others.
Sure.
And of course it is sort of a buyer's market, but I think we are
absolutely
going into a balanced market.
Okay.
Where it would be a healthy market where where the Canadian real estate should be.
Yes.
Really, right?
Yes,
and
for sure.
hopefully with more homes being built, and the shortage of housing crisis, hopefully that should sort of come to an end, and then hopefully Mark Carney with stopping the immigration.
Yes.
So stuff like that. So I think overall we are, it's just so hard to say, because then obviously with the tariffs and then unemployment going up, so things are a little skeptical per se as of right now, but I mean, I think overall we should be heading into a balanced market.
Yeah, no, I hope you're right. Yeah, there's a lot of turmoil in the world, like you mentioned. Tariffs. What bunch of other policies our neighbors south of the border are doing. Even our own economy is a bit precarious situation right now. I think the whole world's a little bit at a pivot point. So no, I agree. I hope it goes towards the balanced market. Right now, it's definitely a buyer's market. I agree. I think overall, though, we do have a large influx of population over the last few years. I think we still will have, right now we have plenty of supply, but I think 30,000 feet view down supply is still lacking overall.
Of course,
yeah. But I hope eventually, once this inventory clears out, there's still going to be, people that are looking for homes. I think the problem is now we see, there's all this inventory, but the prices are still relatively high. So, if you can't afford it, doesn't matter how many are on the market, right? So I hope it does change, especially for, the younger generations. It's sad, right? So
that's where mom and dad
that's true. It does help. I'm sure you have a similar stat, but at an old brokerage of mine, I was speaking to a mortgage agent, and he was saying that like 70 or 80% of his refinances were exactly that. Mom and dad refinancing to take out some equity and give it to their kids. And even then sometimes wasn't enough. You see a lot of that still as well?
100%.
Yeah.
A bit. Yeah.
It's tough. Do you have kids or?
Yeah, I do.
Oh, nice. I don't have any, but I have like young nieces and nephews, so I think about them, right? And it's like, eventually I'll have kids too, but I think about them. It's like, holy crap, like they should have started saving before.
Happen. Yeah, they like it to our age and stuff, and that's where I don't know. Do we have to do all the work? And
well, at this rate, like they would have had to start saving in the womb, like so.
Get RESP and stuff.
Yeah, so it's really tough. But luckily, everyone's worked hard to try and get to where we are. So, hopefully by the time your kids are ready to buy, we're in a position to help. But, life is expensive, right?
Course, exactly.
Yeah. It shouldn't be that case, but,
Well, let's see.
That's life, right? But, well, hopefully they can contact you and get a good rate and, a good mortgage, and, there'll be smooth sailing. So,
for sure.
Well, Jaseena, thank you very much for coming on today. I really appreciate it. If someone wants to get a hold of you for a mortgage related purpose, how can they get a hold of you?
Yep. So probably my phone number or my cell number is the best way.
Okay.
Because, they can text me, call me, leave me a message. But yeah, my number is 416-301-1137.
Okay.
Again, I'm on, Instagram, but I would say cell phone is probably the best.
Okay, sure. And if they just want to see as well Instagram, what is your Instagram handle?
Jaseena_mortgage advisor.
Mortgage advisor. Okay, we'll put a tag as well in the video. Okay, awesome. Anything else you wanted to cover, or?
Thank you so much for inviting me and
I appreciate it. Yeah, maybe we can do it again sometime. So
Yeah, for
awesome.
sure.
Thank you very much, Jaseena.
Thank you.
Thank you.